Hey everyone. There's been a lot of talk about Ford stock lately. A lot of investors have been interested in Ford stock, and I think that's understandable given the excellent situation Ford finds itself in. So, in this video, I thought I'd do a little breakdown and kind of go through Ford's recent financial results to highlight why I think everyone is talking about Ford stock. So, let's get right into it. So, for its consumer segment, Ford's revenue grew 5% and delivered $2.3 billion of EBIT, which is another way of saying operating income. It's earnings before interest and taxes. And they generated an operating margin of over 9%. Now, if you don't already know, Ford operates in several segments. They have Ford Blue, which is the consumer legacy segment, cars like the Ford F-150, regular model, not the electric model, right? So then Ford also has its other segments, which we'll get to next, which is the Model E, which is the electrification segment, the transition to EVs, right? So this segment is growing rapidly. Revenue increased 39% year over year and more than doubled from the previous quarter as they added capacity for both the Mach E and the F-150 Lightning, which is the EV version of the regular F-150. Contribution margin and EBIT margin were both negative as pricing and volume pressures intensified. Now, this has been going on for several months now. I would say since the end of 2022, a price war started in electric vehicles, and that's bringing down prices industry wide, and it's bringing down profit margins industry wide at the same time where capacity and supply is increasing industry wide, right? So electric vehicles are not in a good place right now. The industry overall is not in a good place. Supply is expanding rapidly, prices are falling rapidly, and it's difficult for anyone not named Tesla to generate profits in this scenario, right? And I wouldn't be surprised if things keep going in this direction, if Tesla's profit margins really start to shrink as well and get closer to negative areas. But it's not looking good for EVs right now. So, given the rapid and dynamic changes on the pricing environment, the company no longer expects to achieve contribution margin break even for our Gen 1 products this year. So, Ford now saying they were initially saying they expected to be contribution margin break even for Gen 1 this year. They're now saying that's not going to be the case. It's going to be later. They don't specify when, but it's just not going to happen this year. And contribution margin just means each individual car is break even for the company, right? Not accounting for the overhead costs and everything else that goes into the cost structure. Just one car, making that one car, selling that one car. Is that transaction positive for profitability for the company without accounting for anything else, right? And so Ford is not even going to be profitable on that individual unit level, not even by the end of this year. So it just goes to show how difficult it is to reach a scale large enough to generate profits in that industry. And you can say how impressive it is for Tesla to be generating the double digit gross profit margins it is generating when so many others are having difficulty just reaching, positive gross profits. So despite that dynamic economic environment, Ford remains committed to delivering 8% operating profit margin target in 2026. So in about 3 years, they still expect to generate 8% operating profit margins for that segment, which would be impressive if they are able to achieve that feat. Tesla is, I believe, the leader in this regard. I think their most recent operating profit margin, their EBIT, was around 13%. So if Ford is able to achieve this 8%, it would be impressive to be sure. Now, the third segment for Ford is their Ford Pro segment, which is cars for professionals. You know, the F, not the F-150, but the Super Duty of that Ford truck that's used by professionals. And that delivered revenue increase of 22%, where operating income, EBIT, more than doubled to 2.4 billion. This is why Ford's been doing so well, is the legacy segment. Yes, EVs are growing and they're having difficulty with profitability, but that's been offset by the absolute phenomenal market factors around the rest of its business. The supply chain shortages have really boosted the rest of Ford's business, and that's really working in its favor, even though, okay, their targets for EVs might be pushed out later. That's okay because that's not the biggest area for the company right now. That's just, Ford planning the transition to where eventually more and more cars sold are going to be EVs, but that's not the case just yet. Remember, less than 10% of cars sold worldwide are EVs. Okay, and that's with all this government incentives around the world, right? Imagine there was no government incentives. What would be the organic demand for EVs? Right? Significantly lower. Significantly lower. So there just isn't that organic demand just yet for EVs. The technology is not there yet. The charging is not there yet. The benefits are just not there yet for consumers to make the switch over without all that government incentive helping boost consumer demand. And so, see, despite the difficulties in the EV segment, Ford is raising its profitability forecast for the year. Now saying adjusted operating income of 11 to 12 billion for the year, primarily reflecting stronger net pricing in Ford Pro and Ford Blue, right? The professional segment and the legacy segment is just doing better than expected. They're able to charge higher and higher prices, and consumers continue buying these cars at higher and higher prices. And so Ford says, okay, we'll keep making them, we'll keep making this profit, and we'll slowly invest in electric vehicles when it comes time for consumer demand to switch over. But for now, let's just keep generating this 10, 11, 12 billion dollars in operating profitability from our legacy business, and not hurry with the EV transition. And so I think that's a prudent move by Ford management, and all this profitability combined with that change in forecast for the EV gross profit margin, contribution profit margin, I think really has a lot of investors talking about Ford stock, and I think it's understandable. I just don't know how much longer this excellent scenario can last for Ford. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.